Welcome to the Captain's Blog. I am David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated way back here on Wall Street and make it understandable to you on Main Street. Gave back 1% last week, relatively flat for the year. What happened? The earnings reports came out, the haves and the have-nots. Worse, the commodities trade, the safe haven trade, took a beating. I'm going to call it a crowded trade, overcrowded trade. Gold, copper, 17% top to bottom. Get this, silver down 40% from its peak just 2 short trading days ago. Did that trend continue? Did people sell the earnings report? Did the market continue to sell the commodities? Here's your week in review. We'll start with geopolitical risk. Will a deal happen between the United States and Iran? Well, on Monday, there were rumors that it would, and oil dropped dramatically. Again, more money in your pocket. But as of this morning, as of Friday, the United States is telling any American still in Iran to get out. I don't know why anybody is there to begin with. But in the middle of the week, we had jobs numbers, job openings down dramatically, layoffs at the highest level since 2009. Just go back 2 short weeks. Didn't the Fed tell us that the labor market was stabilizing? The answer is no. And you know it, especially if you work at Amazon or UPS, and you just received your layoff notice too. So in the middle of this week, again, the commodities trade, the software names, the babies that were thrown out with the bathwater. And I suggest to you that you look at some of these names in some of these sectors and realize that there is value. And I believe that on Monday, we'll start having what I like to call Merger Monday, where these corporations and some that are actually doing well will pick up some of these names for a deal. So as of this print, market down 1% for the year. Folks, it's only down 4% from an all-time high. And again, down 2% for the week. Here's what to look for next week. So over the weekend, we're going to have the geopolitical risk. We're also going to be paying attention next week to the fundamentals, the earnings reports. And as I just mentioned, I see tremendous amount of value in some of these names that were thrown out with the bathwater. Now, folks, does that guarantee that you're not going to lose money? Have I ever said that on this blog? I do believe that diversification will help smooth out the ride and give you plenty of ammunition, repeat after me class, to buy on dips. And here's your personal finance tip of the week. 2 common investor mistakes that I'm seeing over the past 2 or 3 weeks. First is this, trying to chase the market, the overcrowded trade in the commodities, the gold and silver. Folks, don't chase this market. Do not time this market. Short-term money. Get it out of the market. It shouldn't be here to begin with. 6, 12-month money. Cash, CDs, 12, 18-month money. The same thing. There's never a worse time to call and take money out of a market where, in my opinion, it is oversold. That money should be at the bank. And lastly, a big shout out to my Sanibel, Illinois crew. A great visit. And Billy from Sanibel said this, Dave, this is what it looks like when you retire with flagship wealth powered by Trilogy. So thank you all for checking in, and we'll see you next week on the Captain's Blog.